Good afternoon. Actually, I'm based in Bangalore. I own a proprietary firm called Dot Technologies, and we design and manufacture electronic test and measurement products, which is voltmeters, ammeters, multimeters, power supplies, which are primarily used by industries and various laboratories in engineering colleges and science institutions. So actually, where and similar to us, there are quite a few companies in India. Some of the big names, international names in our domain will be the which are US based or even China or Japan based Tektronix, Fluke. So these are the big names. Now, my question related to this is a sole proprietary firm. I do have some thoughts to bring in new products and actually design and make in India. As we know, there is most of the manufacturers in India, but there is very little research and design work as far as electronic products are concerned. Many of these are imported from outside and then being sold as Indian brands in our market. And this includes even some of the big Indian names, including some of the home appliances as well. Okay, so here and we, whereas our focus has been basically to do the design right from scratch and take it to the manufacturing and then sell it as our design and made in India kind of product, and not just a make in India as right now the government is actually trying to promote. So in this respect, I was looking for some investing partners if we could get. So my question is, for a sole proprietorship firm, what is the process for getting an investment? I have spoken to many people out here on this one locally here, but one of the things is many are not very willing to invest in a sole proprietorship fund. So, any advice on this will help?
That's very correct. Nobody can be, whether even if they are interested, they cannot invest into sole proprietorship. One, you are sitting on on fire when you start a sole proprietorship, because this is the worst kind of structure in the world. Every responsibility is yours. Sole proprietorship is meant for small roadside vendors, who are into golgappe, chaat pakodi kind of. Sole proprietorship is not meant for businesses which are scalable or which has to go forward, because absolute responsibility is yours. Suppose somebody pays you 5 rupees and that 5 rupees some dispute is there. This guy can sue you and take you in the court, and every responsibility is yours, right? You have to go yourself. You cannot delegate it to anybody. So this is why private limited company has, the best part is that is liability is limited. So your liability in a private limited company is limited to the stock that you hold, the capital that you have, right? And that is why you can scale up. When you scale up a company, if you are a proprietorship and you are working in Bangalore, Chennai, Mumbai, what if somebody some mishappening happens from anywhere, then your entire firm will be shut down, right? And this has happened in the past. I'm a lawyer also, I can quote you n number of examples. So this is a bad structure, please change it, number one. Second, you can't issue shares in a proprietorship firm, right? Firms do not have this structure. So how would an investor invest? Even if somebody wants to invest with you, has to become a partner. If somebody becomes a partner, then this will become, firm has to be closed down, a new partnership firm has to be started. And in that case, your partner will also have absolute liability. So firms are not the right structure for startups. The best structure available is private limited company. Then later on, the only objective of investors is to have an exit. You can't do an IPO if you are a proprietorship firm, partnership firm, right? Even if you are an LLP, no point. So only structure left out which is suitable for the startup is to have a private limited company. This is point number one. Second is, you will be requiring 3 documents. One is pitch deck. This is the document which is used while you pitch, that is while you present yourself in front of the investor. This is a 12 to 15 slide document having your problem, solution, traction, revenue, KPIs, lot of 15 slides. And you can go to Startup Lane's website under services. We have mentioned this pitch deck, how you can make the pitch deck, and everything about pitch deck is mentioned. I have myself wrote that article, right? So this is first. Second, you will be requiring the financial projections. Investors want to know how would you spend the money and how much requirement per month you have for the funding, right? So this will come from your projection sheet. Suppose first month you will be spending 5 lakh in acquiring customers. And let me tell you one more important thing. 85% of your money should go in acquiring customers, not for building your infrastructure or anything else or paying your salaries. 85% or above should go in acquisition of the customers, whatever money you are taking from the investors. So if you are taking say 1 crore, 85 lakhs you have to spend on acquiring customer, which is digital marketing or maybe physical marketing. Marketing has to be there, right? Sales. And then whatever revenue will come up from the sales, you need to depict how much negative cash is there. Whatever negative cash you are getting, this negative cash. All right. So I was, let me continue. So I was telling about the financial projection. In that financial projection, you need to depict what is the negative cash you have every month. Negative cash is how much money you will be short of, right, in your customer acquisition process. And whatever amount comes for next 18 months, this amount will become your funding required for 18 months. And this is called runway. This 18 months period is technically called runway. That is how much time I will get after raising this round, how much this money will give me time for acquisitions of customers. And in midway, you have to raise another round of funding before your runway expires. So if you have a 18-month runway, you need to raise the second round of funding by the end of first year, 12 months, right? And that is how existing investors get an exit. Your valuation will increase every round, right? So you have to divide your entire funding process into multiple rounds and break down the system. If you are looking to raise 10 crores, first round or whatever you want to call, if you want to call it a tranche, first tranche should be only 25 lakhs because that is the only, that is the minimum amount you can raise as per government rules, right? Use that 25 lakhs, increase your valuation, and then raise 50 lakhs, then 1 crore, like that. This way you will be able to save a lot of equity. If you raise more money initially, you will end up losing the control of the company, right? So that's how it is. Once you develop this was the second document. Third is valuation. So you need to get this valued, how much value of the company is there. And after you have 3 documents, you can apply to Startup Lane's website, and our team will call you and give you a date for a mock pitching. You will pitch to our team, and on the basis of that pitching, they will evaluate and give you some feedback. And then there will be one day, another date given to you for research work done. So we prepare a research report on the basis of your inputs and the market data, right? This research report is prepared free of cost that we present to our investors. On the basis of this research report, investors show their interest, and we will give you a date of the demo day. On the demo day, you have to come over the Zoom meeting for 40 to 45 minutes. You will pitch, present yourself, and they will ask you a couple of questions. After that, whomsoever is interested will commit a particular amount of funding. That's how your first round of funding would happen. Any follow-up question you have?
Thanks. So right now, as you advise, so we convert it into the private limited company, right? So what is the process for that?
Yeah, so you can approach our team. We are very cost competitive. We do private limited company registration. 12,500 is the only fee plus GST, right? But be aware, once you start a private limited company, there are a couple of compliances, right? Because proprietorship maintenance is very, very cost effective. It's cheap, to be honest, right? If you are spending say 5,000, 10,000 rupees per year on just maintaining everything, here on a private limited company, you will end up spending around 50 to 60,000 rupees, right? You need to do accounting every month for compliances. So 12,500 rupees is the fee for up to 40 lakh rupees of revenue for accounting. 12,500 separately for filing your GST returns. Annual I'm talking about, right? 12,500 is for ROC compliance. There is a compliance that has to be done to the registrar of the company, to the ministry, all the documents go. Plus audit has to be there. So approximately there is a cost of 50 to 60,000 rupees per year. So consider that, then only go for a private limited company. But yes, if you go for that, that is a very serious and a suitable structure. Even your defunct companies could be sold off at a very good price, right? People buy and sell company, that becomes your intellectual property. You can't sell your proprietorship firm, not possible. But everything that you do in a company is your intellectual property that builds up, and you can sell off that company later on. Even if it is defunct, if it is not doing anything, even if you are doing just compliances, people are there who buy companies which are old companies, right? So that you can research well yourself, and then only go for it. If you want, we can do your company 12,500 including of everything except Punjab registration. If it is a Karnataka registration, we can do everything including your digital signature, everything, government fee in 12,500. Punjab is extra, okay, because government fee is very high there.
Okay.
All right, thank you so
Thank
much.
you. Thank you.
Pleasure.